Welcome back. We were having a conversation about money markets in the stock market, which is generally bonds and bills and commercial papers of all sorts. And in the first segment of this show, we had a conversation with both Lawi from Tanzania and Willis from Kenya about the markets and what makes the money markets so attractive at the moment. In Kenya, it's partly because of the cycle of liquidity that we've had since early 2020, and partly because of the attractive infrastructure bond. In Tanzania, it looks like government is more trustworthy than the equities market, and so people just love bonds and bills in Tanzania as well. But I want to move this conversation towards corporate issues, both bonds and bills. How is the corporate money market like in Kenya, Willis?
The corporate bond issue has really has slowed down in the recent past. There are few incidences that happened in the market which messed up very many investors, especially corporate investors. We know that those by the time Chase Bank was being taken into receivership, Imperial Bank were taken into receivership, but they were holding very heavy investments by investors, which unfortunately are still locked in those markets. So along the way, most investors became shy to corporate
debt investments.
Yes. But of recent, we've seen a few positivity. We've seen Econ investments coming in and issuing a bond, which was very much oversubscribed. And they even entered the market twice with the green bond, again an oversubscription. The other day, we saw EABL coming in looking for 11 billion. They got an oversubscription of 234%, showing that there are two fronts on the same. Number one, the type of company that's issuing the bond, the reception will be positive, and then the liquidity levels in the market, because at that particular time, the market was starved of good corporate bonds. So the moment they issued it, it was a 5-year bond at 12.5. Those are very extremely good rates, especially for a corporate bond.
Yeah.
That's competing with government paper, which is about 20 years government paper. So definitely everybody went for it, and that's the reason why those are on subscription. Along the same time, when EABL issued their bond, we saw the government also going for a short-term bond, which was a 5-year bond. Again, the market told you that we are starved of short-term bonds, and those are oversubscription. So those are some of the things that we've seen in the market on that front.
I think we've had this conversation here about Savannah Cement going abroad. I think they've gone to Ireland to look for financing, debt financing, as opposed to coming to the local market because, quote unquote, they were talking of capacity issues, that the local market might not have the money they need. And it's roughly around 30 billion Kenya shillings. Do you think this is wise? And really, could they have gotten this money locally?
They could have gotten the money locally, but unfortunately, you see, the way it's structured, you need the money in dollars. That's the reason why you'll go out of the Kenyan market. Remember that being a cement manufacturer, they import a lot of clinker and other raw materials from out there. So if you take
actually
the money,
this time around, I think they want to establish a clinker plant in Kitui. So maybe the equipment is the one that they were looking at.
Yes. So anything that is going to do export and import will affect the dollar. Then they'll get a direct hit from that front. And also the ability to trade the bond in those markets which have higher liquidity compared to the Kenyan market. I'm not saying that the Kenyan market don't have liquidity, but the Ireland and the likes have better market in terms of bonds compared to what we have in Kenya.
They have more advanced money markets than we do.
Yes.
But indulge me a little more on Savannah. I know there are translation costs in terms of if you wanted to go and get the equipment in dollars and you've gotten the money in Kenya shillings locally. But isn't it going to be expensive? Because now they have to translate the money in Kenya shillings. Rather, they make their revenue in Kenya shillings.
Remember that as much as you make your revenue in Kenya shillings, you have to lock the interest on the bond before you even start thinking on how you're going to issue the bond.
Correct. So if you're making your money in Kenya shillings, and the value of the Kenya shilling, as we are seeing, is going lower and lower, and the dollar is getting more and more expensive. It means in 5 years, by the time they have repaid the loan, assuming that it takes 5 years, at that time, they will buy the dollar more expensively to pay their guys in Ireland, or the pound.
That is why we have other instruments that can manage that risk level, especially what we call exchange rate risk. We have derivatives that can be able to manage that risk. So if they are in the market and they know those eventualities will happen, then all you have to do is just go into the derivatives market and manage that risk by countering the movement that you believe.
But I don't think they have gone into the
we also don't know if they haven't gone into the market to look at those derivatives instruments.
You have indulged me.
But if they have very good financial CFO, then I'm sure the CFO should have gone into those markets.
Yeah, because absent of that, going abroad would be more expensive in the long run.
Yes, it is. That's the reason why we manage the risk by other instruments.
Well, let's go to Dar es Salaam. Lawi, Ndugu Lawi, how is the corporate money market in Dar es Salaam doing?
All right. I'll still say the corporate issue or the corporate bond is it's not something very new here, because up to this moment, it's like almost like three institutions managed to issue one, and Exim Bank is among the bank which decided to issue the corporate bond, and then it was issued on 2015, and it was 6-year bond, all right, and then the coupon was around 15.59%, and then they managed to get almost 14.9 billion Tanzanian shilling. And then we have NMB and TMRC as well. So the total value of corporate issue from 2015 until right now is like 120 billion. But NMB, which is one of the largest bank, last week on the 7th of February, decided to issue what we call Jasiri bond. So it's the same as corporate bond, and then it's a 3-year bond with a coupon of 8.5%. But if you look at it, the rates are not, they're quite different compared to fixed rate, the fixed deposit rate. So there's, I mean, they're not very, I cannot say that people don't really go for them. All right, people will prefer to go on the government bond, but it's still picking up at the same time.
So what you're saying is that the corporate capital market is not as attractive as the government papers.
Yes, I would say that. Yes.
Yeah, I mean, from what I hear, at 8.5%, it makes sense if it's not so attractive compared to what's the average rate of a 10-20-year bond in Tanzania currently? 20-year
bond is 15.49%.
So we are comparing 8.5 versus, come on, yeah, I'd so go for the 10-year one or 20-year one and call it a day. Fair enough. Yes. The younger generation hasn't really picked up on bonds. I think they are still excited with the idea of buying into securities. On the other hand, I had one in the studio the other day, and they are more interested in bitcoins and cryptocurrency, form of investment. Let me start from you, Willis. In Kenya, the other day, the Central Bank of Kenya came up with Akiba. It wasn't so successful. Are the young people really keen on this kind of investment?
Not very much, not very much. The essence of young people is the ability to see the return as it works. Number two is the ability to have their money in liquid form, considering that they haven't established that buffer where we can say they want to invest for the 5, the 10-year that a bond will request for. But you see, for equities and other instruments like the Bitcoin you've mentioned, you can go in today and come out 3 days later with either a loss or a gain along the way. So the ability to a quick transaction is what will attract any person into such an investment. But along the way, and also the advice that we give people as they continue to invest is that as you're young and you're still energetic and you have high risk levels, go for the risky instruments. Look at the Bitcoins and you still have time to recover even if you lose the 100% investment that you've invested in. But as you age...
I don't like the 100% investment loss.
It's Bitcoin. We've seen market crash immediately. We've seen things change. We've seen companies close. If you had invested in what we had called Atlas investments 2 years back, you've lost all your investment. So there's a probability on that. But at the end of the day, when you age and towards your age, Odhiambo, you need to now start shifting from equities to fixed income. Reason being is that you need that guaranteed income along the way. So
are you saying my risk appetite has significantly gone lower?
Unfortunately, it's not my saying, but economically and also investment-wise, your risk appetite is supposed to go down as you age, because you can't recover 50% loss on your investment, but you can contain your investment to be able to grow at a slow rate along the way. The 8% that you're looking at in Tanzania, you see it's 3 years 8%, and it's annualized. If you put that money in fixed deposit and you're earning 5%, you see it's along the same period. 8% is still better than go for the 15% and also lock your money for 20 years. So also the turnaround on and ability to churn your investment and get it in liquid form is very key in terms of determining when you're going to invest and when you're not going to invest.
Yeah, but from what I observe, the guys who invest in some of these instruments really don't have liquidity challenges or immediate needs for liquidity, at least the bulk of them. So when it comes to investing here, they are comparing 8.5% with a little high risk, because this is still the corporate, versus 15%, lower risk, but you have money there.
The only reason why you will shun corporate bonds and also go for the government bond, it's the liquidity in the market. So for example, in Kenya, we have EABL with 11 billion bond. To get transaction in that 11 billion is very hard. But government securities is about 120 billion. I'm sure you'll be able to transact better with the one, or even let's take one bond which was issued the other day with about 78 billion compared to 11 billion. You'll get more liquidity with the government papers compared to the corporate bond. So even if you're going with a corporate bond, you better go in and lock it out than transact, because you will have a lot of problem in terms of liquidating your investment compared to investing in government. So the only reason why you'll go for the government paper is because you're able to get into the market and get out of the market with little effect on your investments.
Fair enough. Lawi, are young Tanzanians investing in bonds and bills, or are they like the Kenyan counterparts that prefer equities and cryptocurrency and forex?
All right, thank you very much. The young Tanzanian here in Tanzania, at the moment, they've started to invest on government bonds mostly compared to equity market. But the thing is, we have not, the country has not put a proper, there's no clear regulation the government have not allowed the use of cryptocurrency and the forex trading. So it's not official yet here in Tanzania. So people, the one which they want to go and invest, they go and invest on their own. But mostly young people, they like to gain from something. People think like if you invest on government bond, it's going to take a long time for them. But after getting different lessons that you can invest in government bond and you can use that bond as a source of collateral to go get a loan, people now have started to invest more on bond. And then I'll give you one example. The last auction of 25-year bond, the total amount of retail clients, it consists of almost around 62 billion Tanzanian shilling from the retail client. And then, of course, the pension funds and the insurance company, they dominate the market. But if you've got retail clients who were willing to invest almost 62 billion, that is a lot of money. So we are seeing now different young people going to government bonds at the same time.
All right. Before perhaps we say bye-bye to you in Dar es Salaam, Lawi, just give us a brief of the yield performance perhaps for some of the issues in the market right now?
Yeah, at the moment, the yield performance was very good. All right. On 2017, I mean, the yields were going almost 17%. But since the price of bond has gone up, because most of the bonds nowadays are traded between 103% to 130%. So the yield performance has gone down. Let's say, for example, the 15-year bond, the yield performance is 11.96%. The 25-year bond, the yield is 13.81%. And the 20-year bond, the yield is 14.74%. So we've started seeing yields they're going down, and the price of bond is going up.
All right, Lawi, thank you very much. I think that does it from Tanzania. Well, that was Lawi from Tanzania. Lawi Lawrence Mlaki, who is CEO of Lase Financial Services in Tanzania. Well, Willis.
Thank you very much.
How are the yield performances in Kenya?
The yield curve in Kenya, the yield curve has three phases. The first one is the short end, where we have liquidity managing the yield. We've seen it edging upwards towards the time when there was low liquidity. It pushed the market up. Now that there's the high liquidity, there's very minimal upward movement compared to the previous time. In the middle part of the yield, we've seen it's being affected by the primary issues, where the government has decided to be reopening 2 or 3 papers, and one of them is a midterm paper. So those are the areas where, when these are primary issues, you'll see the yield curve going up, and then as the market start trading, the yield start going down. On the long end, very minimal movement, and the reason for that is that very little demand on that front, and mostly due to the demand on that space is normally for pension, guys who want to hold it for the long term, the 25 years and the 30 years. So those are some of the areas that will affect yield. But on the short end is where most of the activity is, and you'll see that it will tend to rise faster compared to the other space on that. But as of the moment, we're stagnating. As of December, we saw a little bit of a Mexican standoff where we had bids and nobody wanted to accept the bids. Simple reason is that everybody was opting to see that the yield curve will tend to either stagnate where it is or edge downwards. So when that happens, we'll tend to see everybody shying away from the market. But hopefully, with the first quarter coming, being in the middle, we've seen a little bit of activity in the bonds market, and those are some of the indicators of how the yield curve will end at the end of the quarter.
Yeah. Well, fair enough. Is there potential that the inflationary pressures that we expect in an election year will push the yield curve in a different direction?
It's supposed to be, but the good thing about it is that inflation has remained within the government range of 5.0% plus or minus 2.5%, meaning that it can even go up to 7.5% and still remain within the government range. As of, again, we haven't seen it touching those levels. With the highest we saw was September, where we had about 6.9%. But as long as it's within government range, then it might not affect the yield that much. The only problem with that is that now the timing of fixed income returns will be directly affected by the inflation level. And remember, high inflation will have, again, effects on the people of your age in terms of their investment disappearing due to inflation.
Clearly, you are into my age. We will have that conversation at length. Well, viewers, I think we'll call it a day at that point and perhaps decide that indeed the money markets are attractive as well as the corporate bond market. And if you have some money and you are quote unquote with a low risk appetite like myself, you may want to consider that segment of the market. It's been an interesting conversation with Willis Nalwenge and Lawrence Mlaki from Tanzania. And join us again tomorrow at 4 p.m. as we have another edition of Markets Today. I am your host, Odhiambo Ramogi. Goodbye. I'll leave you with the currency trading of the day and the performances therein. Goodbye.